Good morning, and I hope you're having a good weekend. This is Quant Trade Edge, and this is an assessment of natural gas. Right here we have the daily chart of natural gas, and what intrigues me for the long side here is this set of divergences. This low in the oscillator came from this low in price, and then we got a lower low in price, but a higher low in the oscillator. And then here we had an even lower low in price by a few ticks and an even higher low in the oscillator. This bar has not yet made a lowered low, so we're not really looking at that yet on the oscillator, but the general pattern is here where we're making lower lows and the oscillator's making higher lows. Now if we blow up this daily chart, you'll see that for the last 3 days, so basically Friday, Thursday, Wednesday, all stayed within Tuesday's range. That's something that we call a Hoagie. It can break either way. And here we touched 226.3 and here we touched 224. So we have a bit of a 2B type pattern, a trap, turtle soup, whatever you want to call it. The 2B pattern wouldn't trigger until we take out this 249.3, and the Hoagie would also not trigger until we take out that 249.3. So that is the most conservative entry to the long side, would be waiting for the break of that level. And from the daily chart, we don't have a whole lot of other indicators. Once we start building a Hoagie, to me, nothing that happens inside the Hoagie is particularly significant on the daily time frame. It's, until we make a lower low or a higher high than this bar on Tuesday, we don't have new information on the daily. Now, if we take it down to a lower time frame, like the 120, it starts to look a little bit different, and we can perhaps get a bias towards which way we think this Hoagie will break. Starting at this trap high up here, and let me stretch this out a bit so we can see it clearer. Starting from here. Now you can see we have numerous touches on this trend line. We have where it's starting up there, we have rejection here, a rejection here, a rejection here, 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 and then what finally happened on Friday was we did ease up above that trend line and then come back down to retest it. So if we are playing this like a broken trend line, it is possible that the next move, now that the trend line has been tested, is to go higher. So all we're trying to do is find good risk-reward situations. If you want to go long against this trend line with a stop at the low, that's what, 24 versus, we closed at 31, 7.8 cents. That may be worth a stab, but be ready for it to fail. And if it does, that shouldn't stop you from taking the, I'm not sure how these became red. Oh, they're ellipses, right? That shouldn't stop you from taking the real trigger, which is going to be 249.3 against the low of 224. So you're going to have about a quarter stop, but my guess is you'll get about $1 off of this. 350 would be up here. So this is no longer the U-turn structure because we got this lower low. So we'd have to relook at that initial signal that we were looking at. And really from here, this is a clean 2 waves down. Since this is a Hoagie, all of this stays the same. So it would make sense for this to give us some distance from this 2 legs down pattern. But again, it all depends on your time frame, your risk tolerance. Again, the real opportunity here is the break of this Hoagie, particularly to the upside because of the divergences that we've had. If this Hoagie were to break to the downside, which you have to remember is a complete possibility, then we'd probably be looking for something that completes this this channel. this. It had respected this channel fairly well. If we do break lower, there was potential down to $1.10. I don't see how that fundamentally happens, but not here to argue with the charts. And, again, so these divergences, to me, I would not take a trade lower. It may make money, but it's going against these divergences. So my thesis is these divergences have created a bottoming pattern here. And when we get confirmation that we're breaking out from there, that's the trade that I want to be in. So anyway, I hope you find this helpful. And, stay safe out there. And I'll see you later this week.